What's happening in the world of finance? The Intuition Finance Digest gives you a unique take on some of the industry's major trends. In recent years, Bitcoin has captured the attention of investors worldwide with its meteoric rise in value. The digital currency, once considered a niche investment, has now become a mainstream asset class. Bitcoin's recent surge can be attributed to several factors, one of which is the anticipation and launch of Bitcoin exchange-traded funds, ETFs. This podcast will delve into the impact of ETFs on Bitcoin's price, explore previous instances of price surges due to ETF expectations, analyze the recent launches of Bitcoin ETFs, and discuss other factors contributing to Bitcoin's recent surge. Bitcoin ETFs are investment vehicles that enable investors to gain exposure to Bitcoin without directly owning the cryptocurrency. These funds track the price of Bitcoin and allow investors to trade shares on traditional stock exchanges. The introduction of Bitcoin ETFs has made it easier for institutional and retail investors to invest in Bitcoin, as they can now leverage the existing infrastructure of the stock market. The anticipation and launch of Bitcoin ETFs have played a significant role in boosting Bitcoin's price. Similar expectations had previously led to a price surge in 2021, although the approvals did not materialize then, resulting in a price correction. However, the recent launches of Bitcoin ETFs have rekindled investor interest, contributing to the upward price movement. Investors perceive Bitcoin ETFs as a legitimizing factor for the cryptocurrency, as they provide a regulated and accessible way to invest in Bitcoin. The introduction of ETFs has also brought a level of convenience and familiarity to the investment process, attracting a broader range of investors who may have been hesitant to directly invest in the cryptocurrency due to its perceived complexity and volatility. Bitcoin's price has historically experienced significant surges in response to expectations surrounding the approval of ETFs. In 2017, when the Winklevoss twins Bitcoin ETF proposal was under consideration by the U.S. Securities and Exchange Commission, the SEC, Bitcoin's price skyrocketed. However, the SEC eventually rejected the proposal, leading to a sharp price correction. Similarly, in 2021, the anticipation of multiple Bitcoin ETF approvals led to a price surge. Investors speculated that the entrance of institutional money through ETFs would drive up the demand for Bitcoin. However, the approvals did not materialize, and the price corrected as expectations were dampened. These instances highlight the influence that ETFs and regulatory decisions can have on Bitcoin's price. In recent months, several countries have approved the launch of Bitcoin ETFs, further fueling Bitcoin's value. Canada was the first to approve a Bitcoin ETF in February 2021, followed by Brazil and several European countries. The United States also saw the approval of its first Bitcoin futures ETF in late 2021. The launches of these ETFs have had a positive effect on the market. They have not only increased the accessibility and availability of Bitcoin to a wider range of investors, but have also instilled confidence in the cryptocurrency. The entrance of institutional money through ETFs has brought more liquidity to the market, making it less susceptible to manipulation and price volatility. The recent launches of Bitcoin ETFs have reignited investor interest in Bitcoin. The accessibility and familiarity of ETFs have attracted both retail and institutional investors who were previously on the sidelines. This influx of new investors has contributed to the upward price movement of Bitcoin. Investors are drawn to Bitcoin's potential for high returns and its ability to diversify investment portfolios. With traditional investment assets facing uncertainties and lower returns, many are turning to Bitcoin as a hedge against inflation and a store of value. The introduction of ETFs has made it easier for investors to gain exposure to Bitcoin, leading to increased demand and subsequently driving up its price. Bitcoin undergoes a process known as halving approximately every 4 years. During a halving event, the number of new Bitcoins created through mining is reduced by half. This event is programmed into the Bitcoin protocol and is designed to control the rate at which new Bitcoins enter circulation. Halving cycles have historically had a significant impact on Bitcoin's price. The reduction in the supply of new Bitcoins, coupled with increasing demand, has led to price surges in the past. The scarcity created by halving events has contributed to the perception of Bitcoin as a limited and valuable asset, driving up its value. While the launch of Bitcoin ETFs has played a crucial role in Bitcoin's recent surge, other factors have also contributed to its value increase. One such factor is the growing acceptance and adoption of Bitcoin by mainstream institutions and corporations. Major companies like Tesla, MicroStrategy, and Square have added Bitcoin to their balance sheets, signaling confidence in the cryptocurrency as a long-term investment. Additionally, the global economic uncertainties caused by the COVID-19 pandemic have led to an increased interest in alternative investment assets like Bitcoin. Investors are seeking assets that can provide a hedge against inflation and protect their wealth in times of economic uncertainty. Bitcoin, with its decentralized nature and limited supply, has emerged as an attractive option for many investors. While the recent surge in Bitcoin's value has been impressive, there are potential risks and challenges that need to be considered. One such risk is the regulatory uncertainty surrounding Bitcoin and ETFs. Different countries have varying regulations and approaches to Bitcoin, which can impact its value and the ability to launch ETFs in certain jurisdictions. Another challenge is the volatility of Bitcoin's price. While the recent surge has been positive for investors, Bitcoin's price has historically experienced significant fluctuations. This volatility can make it challenging for ETF issuers to accurately track and replicate the price of Bitcoin, potentially impacting the performance of Bitcoin ETFs. Bitcoin's recent surge in value can be attributed to a combination of factors, with the anticipation and launch of Bitcoin ETFs playing a significant role. The introduction of ETFs has increased accessibility, attracted new investors, and instilled confidence in Bitcoin as a legitimate investment asset. Looking ahead, the future of Bitcoin and its relationship with ETFs is promising. As more countries approve and launch Bitcoin ETFs, the market for Bitcoin is expected to expand further. Institutional and retail investors will continue to explore Bitcoin as an investment option, driving up demand and potentially increasing its value. However, it is crucial to acknowledge the potential risks and challenges that Bitcoin and ETFs face. Regulatory uncertainties and price volatility remain key concerns that need to be addressed for the sustainable growth of Bitcoin and the ETF market. In conclusion, the recent surge in Bitcoin's value has been influenced by the launch of ETFs, investor interest, halving cycles, and other contributing factors. Bitcoin's journey from a niche investment to a mainstream asset class is a testament to its growing acceptance and potential as a long-term investment option.